Calculate return on investment from the following information. The information includes net profit after interest and tax rupees 5 lakh. Rate of tax is given to be 50%. 10% debentures are for rupees 10 lakh and shareholders funds are given to be 15 lakh. Now students, to calculate return on investment, we require two things. First one is profit before interest, tax and preference dividend, and the second being capital employed. So let us start with the calculation. First of all, we will calculate capital employed. Capital employed can be expressed as a sum of shareholders funds plus long term loans. Shareholders funds plus long term loans. Shareholders funds include or have a value of 15 lakh. It is clearly mentioned in the question. And the long term loans include debentures. So for long term loans, we will add debentures of rupees 10 lakh. Capital employed is rupees 25 lakhs. Now, let us come to the numerator part. The numerator part includes net profit before interest, tax and preference dividend. Now, in this case, students, we are given net profit after interest and tax. So, let us calculate net profit before interest and tax. Let net profit before interest and tax be rupees X. Why so? Because students, in this case, it is after tax that is given to you and the tax has been expressed as a percentage. This 50% would surely be calculated on net profit before tax, which is not given here. So we will take it to be X, net profit before tax be X. Then tax would be equal to 50% of X, that is 50 upon 100 X, and the value comes to X by 2. Lastly students, net profit after interest and tax is equal to net profit before tax minus tax, which comes to X minus X by 2 as we had assumed and calculated here, and net profit after interest and tax is given to be 5 lakhs. So students, 5 lakh is equal to X minus X by 2. Calculating it, we will get X by 2 is equal to rupees 5 lakh, and on cross multiplying, X is equal to rupees 10 lakh. So students, we can say that net profit before tax, which we had assumed to be X, is rupees 10 lakh. Now, coming to the interest part, it is clearly mentioned here that debentures of rupees 10 lakh carry an interest of 10%. So students, interest is equal to 10% of 10 lakh, which is equal to rupees 1 lakh. Adding these two, we will get net profit before interest and tax, which is equal to rupees 11 lakhs. So now students, we have net profit before interest and tax of rupees 11 lakh and capital employed that we had calculated earlier as equal to rupees 25 lakhs. Let us use these two figures to calculate return on investment. The return on investment, which I am writing here as ROI, is net profit before interest, tax and preference dividend upon capital employed into 100. So students, we had just calculated that net profit before interest, tax and preference dividend is rupees 11 lakhs. The capital employed is 25 lakhs into 100. Calculating, it comes to 44%. So students, return on investment according to this question and the figures mentioned here comes to 44%. That means for every rupee 100 invested by this businessman in his business gets him a return of rupees 44.